Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is October 24, 2024, and we're diving into the latest earnings report from West Pharmaceutical Services. Joining us is John, our Senior Analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. It's a pleasure to discuss West Pharmaceutical Services, a leader in the design and manufacturing of innovative solutions for injectable drug administration.
West has just released their third quarter 2024 results, along with an updated guidance for the fiscal year. Let's break down the key highlights and what they mean for investors. Revenue and profitability overview. Let's start with the top line. West Pharmaceutical Services reported net sales of $746.9 million for the third quarter of 2024, which is a slight decline of 0.1% compared to the same period last year. John, can you elaborate on this?
Certainly. The decline in net sales is minimal, at just 0.1%, and when we look at the organic net sales, the decline is 0.5%. This indicates that the company is facing some challenges in maintaining its sales momentum, particularly in its proprietary products segment, which saw a 0.2% decline.
Despite the sales decline, the reported diluted EPS stands at $1.85, down from $2.14 last year. How should investors interpret this?
The drop in EPS is primarily due to a decrease in operating profit margins, which fell from 23.7% to 21.6%. However, the adjusted EPS remains at $1.85, indicating that the company is managing its costs effectively despite the sales challenges.
Operational efficiencies and future outlook. West has increased its full year 2024 net sales guidance to a range of $2.875 billion to $2.905 billion. What factors are contributing to this optimistic outlook?
The increase in guidance is largely due to favorable currency movements, which have provided a tailwind for the company's financials. Additionally, the company has been focusing on operational efficiencies, which are expected to support its profitability going forward.
They've also raised their adjusted EPS guidance to between $6.55 and $6.75. What does this tell us about their future performance?
This revised EPS guidance reflects the company's confidence in its ability to manage costs and leverage its operational strengths. The 5% increase in the quarterly dividend further underscores their commitment to returning value to shareholders.
Segment performance and strategic initiatives. Let's delve into the segment performance. The proprietary products segment saw a slight decline in sales. What are the key drivers here?
The decline in the proprietary products segment is mainly due to lower volumes in the generics and biologics market units. However, high-value products, particularly self-injection devices, continue to perform well, making up over 75% of the segment's sales.
On the other hand, the contract manufactured products segment experienced a modest growth of 0.4%. What's driving this growth?
The growth in this segment is driven by increased demand for self-injection devices, particularly for obesity and diabetes treatments. This aligns with the company's strategic focus on high-growth therapeutic areas.
West has also been active in share repurchases, buying back $506.5 million worth of shares. How does this impact their financial strategy?
The share repurchase program is a strategic move to enhance shareholder value and reflects the company's strong cash position and confidence in its long-term growth prospects.
Risks and challenges. While there are positive aspects, West is also facing some challenges. Operating cash flow has decreased by 13.8%, and free cash flow is down by 32.7%. What are the implications of these declines?
The decline in cash flows is concerning as it indicates potential liquidity constraints. This is partly due to increased capital expenditures, which rose by 7.4%. The company needs to manage its cash flows carefully to maintain financial flexibility.
Additionally, the company anticipates a 1.5% to 2% decline in organic net sales for the full year. How significant is this?
This decline reflects ongoing challenges in certain market units and competitive pressures. However, the impact is somewhat mitigated by favorable currency movements, which have reduced the expected headwind from $5 million to $1 million.
Key takeaways. In summary, West Pharmaceutical Services has delivered a mixed set of results for the third quarter of 2024. While there are challenges in terms of sales and cash flow, the company has shown resilience through strategic initiatives and operational efficiencies.
Indeed, the increased guidance and dividend, along with the share repurchase program, highlight the company's commitment to shareholder value. Investors should keep an eye on how West navigates its challenges and leverages its strengths in the coming quarters.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on West Pharmaceutical Services' performance in the comments below.